Hi traders, it's Kantisa. In this video, we will focus on trading the VWAP as a setup for your trading plan. Please read through pages 1 through 8 of your I Teach Trade Invest manual before watching this video. Pause now if necessary to go back and read your manual. Okay, here we go. VWAP is the red, green, this one, horizontal line that fluctuate up and down with buying and selling on your trading chart. The line is red when the price and candles are below bearish, the VWAP line. The line is green when the price and candles are above bullish, the VWAP line. This chart is the NASDAQ, the NQ, as you can see. And the title of this picture is VWAP Sell Strategy 1. So when you go back to reference this one, go back to VWAP Sell Strategy 1. So on the morning of May 24, 2023, at 12:39 a.m. Central Standard Time, here, a 3-minute candle closed below the VWAP, right? Not the full candle, but the candle did in fact close below the VWAP line. The full 12:42 a.m. Central Standard Time candle closed below the VWAP. However, look at the stochastics. They are at the oversold level, which is 20. So stochastic is a topic within itself and will be discussed at another time. For now, just know that 80 up here indicates overbought with stochastics, and 20 on here below indicates oversold with stochastics. Now, I want you to ponder for a few seconds. If something is overbought, is there more to buy? Okay, think about it. If something is oversold, is there more to sell? Think about it. You be the judge. So over time with your trading, you will develop a trading preference on overbought and oversold. I most likely would not have taken this trade to sell something that is oversold. But as we can see, it was a profitable trade, just not my preference for higher probability. We can look back to see what occurred with the previous candles. We can see that they were trending sideways for roughly 30 minutes prior to the beginning of this downside. So by the time they began to move to the downside, the chart, stochastic, was already at oversold. So take a look at that. So on rare occasions, I do consider, when I'm considering a few other factors, I may take a trade to the downside when it's oversold, but it's rare that I do that. So would I have taken this 12:39 a.m. CST candle to the downside? Probably not. But if I had, I would have earned about $500 to $600 in about 30 minutes. However, I am very comfortable missing out on some trades because I am very confident the setup will appear. So the next thing we're going to do is focus on what occurred when the candles retraced back up to this VWAP line. So after this downtrend, Let's take a look at what occurred after the candles retraced back up to that VWAP line. So now this is reference figure VWAP sales strategy number 2. VWAP sales strategy picture number 2. Now let's take a look at a VWAP trade I most likely would have taken. So we can see that the 4:03 a.m. Central Standard Time, May 24th NQ candle retraced back up to the VWAP. Here we have the tip of one candle closing above the VWAP, and the following candle, the full body, closed above the VWAP. One might ask, wouldn't I consider buying at this time? My response is no. Looking at the stochastics, at this time, the chart is now at overbought, the area in which I look to sell a trade. So the 4:06 a.m. Central Standard Time candle closes above the VWAP. However, the bottom tip of the 4:09 a.m. candle closes below the VWAP. The full body of the 4:12 a.m. candle closes below the VWAP. The full body, take a look at it, the full body closes below the VWAP. So about 2 hours into this trade to the downside, it would have net you about $1,000 with one contract, or $2,000 with two contracts on a 50-point move to the downside, considering you exited the trade at 6:12 a.m. Central Standard Time. Now, you were not obligated to exit the trade at this 6:12 a.m. Central Standard Time unless that is a part of your trading plan. And that's something that you develop, you decide on what you're looking to profit and where you are looking to exit a trade. But in actuality, all technical signs lend confidence to remaining in the trade to the downside. Now let's take a look at another picture reference. This time it's VWAP sales strategy number 3. So you could have remained in this trade beyond the 6:12 a.m. and consider exiting at 8:33 a.m. Central Standard Time at 40 points to the downside, an additional 40 points for an additional $800 with one contract, or $1,600 with two contracts. But remain aware that at the 8:30 a.m. Central Standard Time opening of the US market, it could have been a bit risky remaining in the trade at this point, because at the opening market, it begins to fluctuate up and down tad a bit. However, if you had decided to remain in the trade through the opening, you could have remained into the to the downside. Let's say you decided to exit at 9:30 a.m. Central Standard Time for an additional 30 points, which equates to an additional $600 with one NQ contract, or an additional $1,200 with two NQ contracts. I think you get the picture for trading the VWAP to the downside. So throughout this trade, from 9 a.m. CST from 4:09 a.m. CST to 9:30 a.m. CST time, did the candles retrace up and close above the VWAP at any point, which is this line? No, absolutely not. That, my friend, is called a great sale and a few $1,000s in your pocket. As one may guess, we will practice in the private collaboration group the VWAP buy strategy, which is the inverse of the aforementioned. You will wait for the candle to close above the VWAP to execute your buy strategy. You will wait for the candle to retrace down to the VWAP to buy the support retracement, and so forth and so on. So your task is to practice selling when the candle closes below the VWAP. You will then practice buying when the candle closes above the VWAP. I hope you found this video informative. Again, it's Cantisa, and take care.